growth and future of climate tech startups in Europe. Hello there.
Hello, I hope it works. Yeah, I can start.
Everything works just perfectly.
Perfect. So thanks for having me. Today I will talk about the climate tech startup environment in Europe. And actually, if you have listened to my previous speaker, actually, it's a very good introduction to the topic. So my name is Andreas Rotzenbrunner. I'm a partner at Speed Invest. A quick words about us. So we do invest in pre-seed and seed startups, around 450 million. We have around 200 portfolio companies in more than 30 countries, but a clear focus on Europe. And what differentiates us, we have a big team that also operationally supports our portfolio and have a clear sector focus. And one of that is industrial and climate tech, which I'm happy to lead to our fund. And that's enough advertisement for today. So we'll jump straight into the topic. So why we think climate tech is a very interesting investment area. So as you heard before, actually, the strong goal of the European Union is to be a net zero economy by 2050. And this was explained actually really well. And there's the clear ambition to become a global leader in climate tech. But this also means that we actually have to reboot trillion-dollar industry because the whole economy is built on fossil fuels. That means we have to think about the way we manufacture things, recycle them, reuse them, the way we get around, the way we produce and consume our energy, the way we build our cities and buildings. Also on how do we actually measure, report and finance carbon emissions, and how do we produce food in a sustainable way, and how we can actually use land use in a sustainable way. All of those areas, I think, needs massive change, and this requires also massive investments. And on the other hand, this also opens up opportunities for startups, because all those areas actually are interesting areas for startups. And we are a strong believer at Speed Invest that technology will play a huge role. And we actually see that Europe can be leading in this. Why? Because there's strong talent in Europe. There is strong research at universities. There's a lot of know-how also from the first clean tech wave, like 20 years ago, on renewable energy, on batteries, on so many areas. And that's why we think Europe is actually can be at the forefront. And we already see this in our deal flow. The numbers you see here are the amount of climate tech startups we see in our deal flow. And the number in 2021 is only from the first quarter. So actually we expect a strong rise in startups tackling climate change in Europe. And what has been discussed before on the European Green Deal, we also looked at the European Green Deal into detail. So together with Corandum, our partners on that initiative, we looked at the 8 core pillars of the European Green Deal and actually identified that all of those areas open up massive business opportunities. And if you read those into detail, then you actually realize that everything you read in the European Green Deal also can be an interesting business idea. So what are those areas? First, sustainable building. How can we build and renovate energy and resource efficient? The second thing is energy. How can we supply clean and secure energy? The third thing is manufacturing and the circular economy. How can we modernize our industries and also come to a more circular economy? The fourth pillar is smart mobility, so sustainable and smart mobility. The fifth one is food, a healthy and sustainable food ecosystem. The sixth one is biodiversity. The seventh is zero pollution, where we also looked a lot at carbon capturing and carbon storage. And the eighth one is how do we actually finance that transition to a net zero economy? And then we took these pillars and actually looked for startups all across Europe, across those 8 pillars. And we actually found that there are a lot already. So we identified more than 1,100 startups in those 8 different pillars tackling climate change. And we think that this number will strongly increase because there are a lot of interest, there are a lot of young entrepreneurs and a lot of young talent that actually want to tackle those problems and want to find entrepreneurial ways to solve climate change. And now I will quickly go a bit into the findings that we identified when we looked at this 1,100 startups together with Corandum, and also what are the areas we think are at the moment particularly interesting, and what are the areas that will be interesting in the months and years ahead. So first, what we saw is that most of the companies we actually found tackling climate change are more located in Western Europe. So there's a strong percentage of companies actually located in Germany, and strong percentage also located in France. And I mean, no wonder given the size also of those economies and the countries. But we also see, and I think if we here in the Baltics, right, there's a strong Scandinavia and the Baltics actually have a very strong position when it comes to climate tech, and we see a lot of companies coming out of those countries, which we can see here a bit into more detail. So if you look at Sweden, if you look at Denmark, if you look at Finland, but we also now see a strong uprise in Norway, besides the big economies like Germany and UK. But I think in the years ahead, there will also be, I think, a battle between European countries on who is actually leading in climate change and who actually can attract more investment, who can attract more entrepreneurs to tackle those problems. And I think this will be a very good competition, because in the end of the day, everybody will benefit from that. What we also saw is that if you look at the companies that have been founded over the last couple of years, and also younger companies, there's a strong tendency in energy and smart mobility, which of course are two of the main emitters of carbon emissions. So in energy, there's a lot of new companies tackling everything from how new technology for renewable energy, the battery technology, the way we store energy, the way we transport energy, but also software solutions, for example, to make PV systems more efficient or batteries more efficient. And the second thing was smart mobility. I think there was a strong trend over the last years that I think that that attracted a lot of investment in smart mobility. This is everything from shared mobility, micro mobility, electric vehicles, not only cars, but other kinds of electric vehicles. And this is also now seen if you look at investments done by cities in electric buses and other kind of electric vehicles. So how do we get around, how we commute more efficiently and more eco-friendly is a huge topic. And the third thing that we identified is actually the food sector. There are a lot of trends on how to reduce meat consumption, and also how to use, for example, other materials for like plant-based food and other kind of alternatives to meat, and also a more sustainable farming. But we also can see that there are other sectors. If you look, for example, in the circular economy, which I personally think is a super interesting area, and the EU has these strong targets of higher recycling rates, where most European countries are far off. So we need to think about the topic, and how can we look at different materials also as a product, and also as a potential revenue stream for companies, because you can reuse it, you can recycle it. How can we use alternative materials, for example, in packaging and in other areas? So I think there's a lot of interesting areas to look at over the next years. And also, I think a sustainable finance, everybody talks about ESG funds and the rise of ESG funds, but we also see that there's still lots of things to be done in that segment, because at the moment it is still super difficult to measure how eco-friendly like a company really is, right? If you look at ESG criteria and ESG reporting and all those topics, it's still a very untapped, it's still a very field that is actually in the early days. And I think 10, 20 years from now, we will measure impact for a company as well as we measure return, or as well as we measure risk. So what are the six key trends we saw in climate change, in climate tech in Europe? So over the last years, we actually have seen a lot of startups. We also looked into detail on those more than 1,000 companies. And we saw 6 trends, so to say, that I think are worth mentioning. So the first one is carbon software. There we talk about how to measure, monitor, and help reducing the carbon emissions of companies and individuals. So there are companies targeting consumers, there are companies going B2B. And this is still a very open field, because at the moment, I think, as a lot of you are aware, it is very difficult to even say, what is my carbon footprint? And it is even more difficult for companies, because materials get sourced at different suppliers. There are sub-suppliers. It's a very complex supply chain. How big really is my footprint? How do I measure that? How do I actually reduce that? So I think there are a lot of companies that are focusing on tracking current behavior, B, on how can I improve my supply chain, make my supply chain more sustainable. So a lot of companies in that segment, and we think that this is going to be crucial, because in the end of the day, a lot depends on having clear numbers and clear measurement of carbon emissions. The second area we looked at into detail is ESG reporting. As I quickly mentioned before, if you look at ESG funds and green funds, right, and this is a topic everybody talks about, and there's a big rise in ESG funds. But if you really look at the details on how you measure ESG criteria and ESG KPIs per company, it is still, there are different frameworks, there are different data providers, which comes down to actually the first pillar, so the carbon software. So having the data is a necessity to do proper reporting. And the question is, having different frameworks, not really being comparable, having sometimes very superficial KPIs, makes it really difficult to say what are really a company is doing on environmental and social and governance and activities. And I think this will be, in a couple of years down the road, will be completely different. And we already see startups where, for example, big asset managers invested and to tackle this and use software to make ESG reporting more efficient. The third one is recycling and waste management. So building a clean and circular economy is one of the key areas of the Green Deal. It's a gigantic industry that is non-digitized, that is very regional, that is very fragmented. But in the end of the day, for example, UBS estimates that the global recycling market is going to be $2 trillion by 2030. And so there will be a lot of change happening, and there will be a lot of companies popping up, competing with traditional suppliers. And I personally am a big fan of this topic, because I think waste is just more than waste. It's a revenue potential. It can be viewed very differently than we did in the last decades. The fourth is plant-based and alternative food. So we see a lot of things on how can we produce and consume less meat and other kind of plant-based proteins, etc. The fifth one, I think, is in Europe, especially in the last year, was all over the place, right? Volkswagen announced that they're gonna everybody's going electric, and there's a big shift, and driven by Tesla. And so the whole electric vehicle battery and charging ecosystem will require massive investment in Europe, will open up massive potential, because we will use our cars differently than we have been used to, with classic combustion engine, and this will change an entire ecosystem, of suppliers and manufacturers. So this, I think, in Europe will be especially important, given for example, Germany with the high percentage of automotive of the GDP. And the sixth one is green energy at home. So we see a lot of more consumers actually demanding like green energy, right? Whatever it depends a lot in different countries, and really different models on having their own PV system at home. How can I only procure green energy from the grid, etc. So a lot of things happening here. How can I make my home more energy efficient? And in the end of the day, I think there will be a lot more companies coming up. And what we look for is we look for companies that create real value through a software component that can disrupt a large and growing market, or create an entirely new one in those areas in climate tech that have a focus on reducing carbon emissions, and that also have first signs of customer engagement, so a first kind of product or engagement customers. And we will be double down on the topic of climate tech, and will be invest much more in the years to come. And if you have interesting startups, send it on to us. And you can also find our initiatives on our website. Thanks a lot for your time.
Andreas, thank you very much. But I cannot stop myself from asking you just absolutely a side question, because we see that you have quite serious stuff in your room behind you.
Yeah. Yeah. Actually, at the moment the weather is not that good, but actually spring is here, so I can open up the biking season. Yeah.
Yeah. Are you cycling enthusiast?
I am a cycling enthusiast, yes.
So let's play with the statistics at the moment. What is your speed record, and probably a record on making kilometers in one day?
The speed record, I think, was around 80 kilometers an hour, 75, something like that. And the kilometers a day was 225.
I will never break your record. Thank you so much for being with us.
It was a really tough day, though.
Yeah,
thanks
absolutely.
For having me. It was a pleasure.
It was a pleasure to have you here. Thank you so much. And we are moving forward now. Ladies and gentlemen, welcome back to Energy Tech Summit 2021. We continue with one more interesting keynote. So please welcome Maria Grabowska, the manager of Plus Impact Accelerator at the Danske Bank Growth and Impact. She will provide a preview on the state of Nordic green growth startups. Hello there.
Hi, how are you?
We are fine this afternoon, and you?
I'm very good. So maybe I will just jump into the presentation, if that's okay.
Absolutely.
So, hi everyone, my name is Maria. I work for Danske Bank Growth and Impact, a small team that works cross Nordic and runs all startup initiatives on behalf of Danske Bank. One of them being an accelerator run in partnership with Contrarian Ventures, but I'm here to give you a sneak peek into our most recent report. which will be launched on May 11th. So since 2018, we've been launching reports that give insight into the state of Nordic impact startups. In 2018, we had a data set of 317 startups, and now fast forward to 2021, we have a data set of 1,200 impact startups and analysis of around 1,300 funding rounds in the region. So I think the data sample size is a reason to celebrate already. But the reason why I'm bringing this content to you today is because the report that we're about to launch in May has focused on a segment of startups that we call green growth. So to give you maybe a little bit of context into what we call an impact startup, we have done a matrix that looks at the correlation between growth of the company and the positive impact of the company. So when in more commercial startups or traditional startups, when the company grows, we tend to see a more negative impact. Of course, we recognize that nowadays commercial startups are trying to reduce their negative impact as much as possible through initiatives such as diversity initiatives, etc. However, in this report, we look at the companies that when they grow, they at the same time increase their positive impact on environment and society. And so, as I mentioned before, this report has focused a lot on green growth. And we have identified 5 clusters within green growth, being 5 of them being energy and utilities, food and agriculture, materials and resources, buildings and infrastructure, transport and mobility. And we looked into how the growth of these 5 segments has been looking like in the region of Northern Europe. That said, I do have to say that because of where we gather the data, which is largely through the platforms we run, the data is a little skewed towards Denmark. Nevertheless, it has representation in all the Nordic markets. So I think I would like to start with the first insight, the first preliminary result. Is how do green growth startups look like when it comes to risk around R&D and product market fit? I think what is interesting about this finding is that contrary to the popular opinion, that being that green growth and deep tech startups are very often R&D heavy and with high risk in product market fit, we have found that actually in the region, around almost half of the startups are low when it comes to costs and risk around R&D, and low when it comes to risk around product market fit. So they're actually much more of a safe bet than we tend to think. Secondly, that's just a basic number, but we have seen a record year of VC investments going into green growth startups in the Nordics, twice as much as it was in 2019, but also 12 times as high in comparison to 2016. And then where does this money actually go? So the investments in green growth companies in Northern Europe, 76% of funding in the region went to the cluster of energy and utility. And then if we were to look at the differentiation around countries and where those specific countries invest, we can see energy and utility cluster to be also the most funded one by all countries, with actually, what is interesting, Norway punching a little bit above its weight if we were to consider GDP and the size of population. At the same time, transportation and mobility, we can see being the least funded cluster in the Nordics. Also, as I mentioned, how we see, so here what you can see is the funding raised per green growth cluster. And we're seeing that energy and utility are the most funding intensive, when transportation and mobility seem to be the least capital intensive companies. Of course, when we look at the previous slide, that poses the question whether it's the fact whether transportation and mobility startups are truly least capital intensive and therefore less investment in the region goes to them, or do we raise rounds around who's popular and who's not, and transportation and mobility is just less popular cluster? That is an answer we weren't able, the question that we weren't able to find an answer to. Secondly, we looked at how does it look like with private and public funding. And when it comes to green growth, of course, private funding is still dominant. But that said, public funding has also increased by 4.6 times in comparison to last year. So that's also a hopeful trend. But that said, the public funding, where is it actually being allocated? So we can see that public funding stops after seed rounds being closed, with public funding being around 46% in the Nordics of seed rounds. Later on in Series A, B, C, and mega rounds, it pretty much disappears. Norway being the heaviest one when it comes to public funding within seed round, the biggest contributor. We have also seen a spike in corporate investments. It has increased 14 times since 2016. And what is also at the same time accompanying this trend is that the corporate venture investing has decreased year to year. And then also, how are companies within green growth funded? If we were to look at source of funding by the more traditional definitions or sources of funding, we can see that it mainly comes from VCs. So VC firms are almost half of all funding that goes to every single clusters. Aside from energy and utility in this case, but we have to say that it's because of the case of Northvolt. That's why the energy and utility here is more than half as funded by corporate. And that's actually all I had to share as a sneak peek. As I said, the report is going to be fully released on May 11th, and you are going to be able to find it on plusimpact.io. There's a really heavy focus on green growth and energy and transportation and mobility. So I would encourage you to have a closer look when it's released, if that presentation was interesting to you.
Oh, is that all?
That was it.
Okay,
It was
so
very quick.
Okay,
Yeah.
we thank you very much for one more interesting keynote. Thank you so much. Many thanks to Danske Bank to joining us on our Energy Tech Summit. Thank you so much. And yeah, let's move forward. We are going to one more interesting presentation. And up next, we would like to welcome one of the great minds behind the Energy Tech Summit, Mr. Rokas Pačiulaitis, the founder and managing partner at the Contrarian Ventures. He will be sharing his views on the state of climate tech VCs. So welcome back. Probably this is like for the fourth time.
Exactly. It's been a long day. Quite exciting one, though.
Absolutely. Absolutely. And later on, we're going to have another interesting panel discussion.
Thanks a lot. Thanks, Andreas and Maria, for doing a first deep dive into how we're looking at from a startup perspective. I think the very important part of this summit is also the investors, and we don't want to forget about them. So fast forward a short introduction on Climate 50 for those that don't know. So Climate 50 is actually an initiative that we committed last year, actually on Energy Tech Summit 2020 back in September. And we said, there's a lot of initiatives for startups, there's a lot of initiatives for corporates, but there's not really an initiative that reflects the work that VCs do. We didn't want to make it a tap on the shoulder for the venture capitalists, but we wanted to drill down and understand who are the leading funds. I think this year especially has been tremendous in terms of new funds popping there and there. And the Climate Tech 50 was, what we wanted to build was the most up-to-date, comprehensive, and insightful annual global climate VC ranking for the climate community. And really, we said, you know, there's a great Forbes Midas list that reflects on the best VCs in the world in investing in technology companies, but this should be one for climate because it's a very important topic. So fast forward, we were really quick. So idea came in September. By January, we launched the initiative, and we got on board with 175 funds with our great partners, Dealroom, Energy Tech Summit, and Landscape. And we got 15,000 data points about leading climate funds. And really, we kind of looked at this as not just a typical ranking where there's a lot of biases. We wanted to build a ranking that would really, really encompass, without bias, how we can really measure the best performing, the best really most active funds in globally. So we took a very interesting approach. So we built a methodology from scratch where we'd reflect on direct and indirect metrics. And aside of just direct performance metrics, we took into account also indirect performance metrics such as brand awareness, inclusive community score, where these companies are building communities around them to educate people and get educated. Founder score, which we did with which is something actually no one actually ever did, but really getting the voice of entrepreneurs out there. So we partner with Landscape to get that score out of it and understand what entrepreneurs think about these funds. And then lastly, public score. Every voice matters. So we took it there and we had a gap of a month and a half where anyone could come to climate50.com and really vote in their favorite venture capitalists. So we did it fast forward. We launched it in 2021, January 15th, and the voting deadline was on 28th of February and 1st of March to reveal the final list of 50 most influential funds. Today, standing here on 29th of April at the final closing of Energy Tech Summit, we're going to even have an opportunity to speak with the finalists who won it. And we really wanted to get everyone to engage and to participate by deciding who are these leading funds. We wanted people to get discovered. And lastly, to use that as a network. So what we did is actually, later in the next week, we're going to launch a thing, what we call Check the Fit. And as I said, we didn't want to build something for venture capitalists to tap on the shoulder and say how good they're doing. We actually wanted to build something for the community. And by community, I mean entrepreneurs. Fundraising is really, really a tricky exercise. Instead of building companies, entrepreneurs have to go and reach out to these venture capitalists and really try to fight for capital. And capital fuels innovation one way or the other. And we're truly believing that, you know, venture capital has been behind the most significant innovations in the world. And we're built this tool which is going to be called Check the Fit, where entrepreneur can put information about the company and it will spit out the list of investors that actually fit their profile. So this is going to be a great resource that you're going to be able to start using for next week onwards. So traction has been phenomenal, actually. It seems we're not just ourselves guessing that this was a great list for our portfolio companies to fundraise, but actually was well received by the community. So we got endorsed by a bunch of other friends and partners, as well as managed to attract over 805,000 votes over a month and a half, and then have 10,000 visits since the inception back in January. What's the most interesting thing for us was a report, because it wasn't just, again, a tap on the shoulder. We actually wanted to drill down and understand what's behind the numbers. So we picked the top 50 for 2020, and we looked at what numbers behind it. So some really, really, really interesting facts behind it. So there's majority of the funds that came into top 50 were early stage funds. North America still taking the lead on the amounts of funds. And a lot of those, as you see, we're primarily focusing in North America and Europe. There's some really, really interesting numbers in terms of AUM that these funds manage. Over 60 billion currently managed by the top 50 funds. Majority of the capital still comes in the growth stage, as that requires majority of the capital. But also what's interesting, there's just a significant gap between North America, Europe, and Asia Pacific. Again, this is not a completely final list. We have 175 funds on that. And we're looking at this specific slide on the top 50. So what's interesting, fundraising has been accelerating. As I said, the only purpose that we did this, we had an Airtable running for our portfolio companies to better understand which are the funds that they should target. And at some point, that list became so wide, and we understood this is a very valuable tool. So, and then every month you see another headline in TechCrunch and Sifted and FT that there's a new fund created. So looking fast forward it, over the last 11 years, there's 130 funds been raised since inception. And definitely 2020 has been the hottest year. Despite COVID, there's been so many new funds coming to the market. Very interestingly, again, US has taken the lead. So most of the funds are actually raised in the United States. Second comes Canada and France as a third. Again, it's not about only top 50, right? It's interesting to look at the whole perspective that was part of our list, and that encompassed 175 funds. Interestingly, out of 175, there were 22 countries covered. So it's not just about Europe, US, Middle East. There's a bunch of countries. There's different capital allocators are coming from. Over 112 billion in AUM managed by these funds. Again, interestingly, there's a lot of capital coming at earlier stage where, again, fund sizes are way smaller. However, interestingly, again, North America taking the lead. And top 5 countries are still also, again, United States. Interestingly, we looked at also the facts that encompass this. So funnily, there's been 300 companies that have been invested in 2020. Despite COVID, this is an accelerating number. And obviously, we feel it as investors. There's more and more competition coming away to fight for the best deals. There's been 34 exits happening in the sector. And for the last 10 years, there's almost 1,000 companies that have been invested by these 175 funds. Funnily, there's 24 unicorns, and there's been 130 company exits over the last 10 years. Again, investments, people were being busy, right? So we've seen most investments coming at the earlier stage. A lot of them are in the United States, and numbers over the last 10 years reflect similar trend. From a portfolio standpoint, what's interesting, everyone talks about unicorns these days because these are the companies that return funds. So funnily, when we're looking at, there's tremendous momentum happening in the industry. We're seeing a lot of companies driving to a range of 100 to billion valuation and then accelerated pace coming at from unicorn space. So we're getting more and more companies created and driving value for the venture capitalists. And again, building great products. Let's not forget that. But numbers matter for us as venture capitalists. So we really try to follow the most hottest companies out there in the space. Again, similarly, statistics coming from where the capital was being raised, where the most companies are created. Similarly, unicorns are driven mostly by the US in the climate space. Again, exits, not the least, one of the other very, very important parts of venture capital business. Again, a lot of those have been driven in the United States, and we're seeing that, the gap is still quite significant. And I think the subsequent investments that are coming now, we're seeing more and more Europe catching up to this. again, from a fund perspective, while top 50 put a great perspective of that amount of funds and being raised, this is exactly the same happening with the 175 funds that we've been looking at. So over 356 funds raised. As I said, 120 billion currently under management. And again, 2020 has been the year of fundraising for everyone. So we're really excited that this number is growing. 112 billion is quite a significant amount of money. However, today we heard a bunch of numbers that finish not with the B, but with the T. So both Biden plan of 2.4 trillion, as well as the opportunity that the Secretary identified, was also 21 trillion. So I asked myself a question: is 112 billion a big number or still a small number? I personally think, and that was one of the motivations to create Climate 50, to not only address entrepreneurs, not only to get more clarity of where we are with the venture capital community, but also to understand that we need more LPs coming into this sector, now more than ever. And what I really want to emphasize, ourselves, Contrarian Venture, being an early stage fund and being an emerging manager, the LPs that back emerging managers are very, very crucial in this very still nascent and new category. So one really scary slide for me is this: 98% of funds are over 100 million. So when we think about it, while there is a rise of funds, micro funds happening, which we believe that create one of the most amazing exits in the industry, we feel that we still need more new investors coming in the space, and we still need investors that focus at seed stage. And to be frank, we really need funds that not necessarily are managing these billions, because it seems to be that it was all about the B's and T's these days. But we need smaller people. We need people that focus on a specific area. And I think really standing on my side of things, we really feel that the smaller funds are really focusing more on the community as well side of things. So that is really important message that I take from here. Again, it's a really great graph. Again, US is still taking the lead. United Kingdom as a very important, I think, European ecosystem hub is also driving a lot of these, especially a lot of the more known funds that treat well back to Cleantech 1.0 are still there and growing fast. And we see a bunch of corporates also shifting their investments to this sector. It's funnily, in 2020 alone, $1 in $3 was coming from a corporate venture capital arm. So let's not underestimate. And I think this is very important observations that other places around the world are also catching up to this and really focusing their fund locations and picking geographies that enable other hubs to create and back entrepreneurs in the climate tech space. So, most important part, who are the winners? Grateful enough for the last presentation, we had ability to cover what's happening in the European system from a startup perspective. We drilled down into Nordics with our friends at Plus Impact, and Climate 50 encompasses this last discussion. What is happening and who are the best in the sector? I'm really excited for the next panel discussion that I'll be moderating with the winners of Climate 50. And again, some of you already saw it because it's already in our website and it's been launched a few weeks back. Super amazing to see some of the really, really strongholds that have been existing for quite some time in this space, patiently waiting for the right time and momentum to drive the returns. Some of the funds like Khosla Ventures has been in the space. Vinod Khosla has been one of the most fundamentally influential venture capitalists in the climate tech industry. He's been backing companies since 2004 in the Cleantech 1.0 and never really given up on the sector, despite not the great success at the very beginning of it. So as venture capitalists, we also always understand timing is very important. However, what's amazing, this really big commitment to the sector has drove them to be the top growth investor in Climate 50 ranking. Also, second comes Aster, one of the early stage funds that have been operating for quite some time. Founded in 2000, have been backing startups in Europe primarily, but also grew up from being backed by leading strategic investors like Alstom, Schneider Electric, and now expanding to a platform that backs entrepreneurs all around the world. Here comes next 47, which is a venture capital arm, which was the top #1 in the corporate VC nomination. They dedicated $1 billion to invest as a corporate to transform Siemens for the next 47 years. Also great to see them on this list as winners. And last but not least, ETF Partners, one of the funds out of UK who's been good friends of ours, founded in 2006, and really great bunch of people, and they were the most public favored VC. So really, really excited to have this great bunch, which we're going to dive discussion about why climate matters next. Again, Climate 50 matters a lot for us. It's really, really a ranking that we want to push by. It serves all part of community. As I previously said, it's not just a ranking. It's not just a tap on the shoulder. It's actually a valid list for everyone. It's the most accurate, the most comprehensive list for the climate community. Whether you're an entrepreneur raising capital, this can help you to navigate the really, really tricky roads of fundraising. Whether you are a fund VC, you're looking for peers to co-invest, you can also check who is there, which geography they focus, which stage they focus. It just makes the conversation easier between peers. And last but not least, the most important emphasis is limited partners. The investors that back venture capitalists and enable them to go on that journey to back great entrepreneurs. Let's not forget that we need more capital. And I hope that this total AUM in the next 5 years is going to go from 120 billion to 1 trillion, because it seems that we like T's these days. Thank you so much. And definitely go to www.climate50.com and you will be able to download the presentation that I just showed and drive in, and make your own analysis of how we're doing in this space.
Rokas, thank you so much. But don't go just yet, because we're gonna have another interesting panel, as it was written on your last slide. Let's speak. We're gonna speak now. We're still waiting for a few of our panelists to join us, so we will be back after a couple of seconds. Ladies and gentlemen, we are back to Energy Tech Summit 2021, and now it is time for the last panel of our summit. Rokas is here with me, and he will be joined by Jan Losek, the managing partner at Future Energy Ventures, Kajisa Johansson, associate at ETF Partners, Fabio Lancelotti, partner at Aster, and Rajesh Swaminathan, partner at Khosla Ventures. So, Rokas, the floor is yours.
Thank you. Super great to have you here. This is really unfortunately, I think I'm really unfortunate that we're not in person. So I would congratulate you by shaking your hand because you're actually, as per your nominations, the best fund. So really great to have you here. And hopefully Climate 50 was worthwhile for entrepreneurs as well. I think we try to really build this into a ranking that can be a reference point of guidance for entrepreneurs and engage more LPs to join it. So I would like to kick off our really probably most favored panel that I'm going to be moderating today, why climate tech matters. And I would like to kick off with each one of you to give a short presentation about yourself and your firm. So I'd like to start with Jan.
Hi, I'm Jan. I'm the managing partner of Future Energy Ventures. Future Energy Ventures is the global venture capital platform, which is 100% backed by E.ON. We are investing globally into what we call energy tech, which is relevant for changing our energy system to a net zero carbon system. Have invested already 250 million euros with our current fund into 60 companies with 15 people in the locations of Tel Aviv, Palo Alto, and Berlin. We manage that and growing further and further and looking forward to an exciting energy future.
Thank you, Jan. Rajesh, Khosla Ventures doesn't need an introduction. I think a lot of people know and follow you guys. You've been one of the first one, and Vinoda is probably one of the best known entrepreneurs to favor back in the day. So I would like to still give you some time to introduce the firm and yourself especially.
Thank you. Appreciate the kind words. Hi, this is Rajesh from Khosla Ventures. We've been around for over 15 years now. We founded the fund. We are operating of our seventh main fund. It's roughly a $1.4 billion fund. And we also have a couple of vehicles on later stage investments, as well as we announced 4 SPACs. We have the ability to write check from $250K all the way through $250 million. But still the passion for how we started the fund and clean tech hasn't changed. We have continued to invest in that space and looking forward to having more discussion around it.
Thank you. Fabio, over next to you. Aster is being one of the oldest firms in Europe. Really excited to have you here and you taking the winner lead in seed early stage category.
Yeah, thanks a lot. I hope you hear me well, first of all, and thanks for having me today. Yes, so Aster, as you mentioned, been around for around 20 years now. I personally am one of the partners today at Aster, based in our Paris office. But I'm with Aster since been more than 10 years. So been I would say halfway the journey here. And we are otherwise an early stage global firm, having offices in Paris, as I mentioned, London, San Francisco, and Tel Aviv. Investing pretty much 2/3 of our fund in Europe, having invested in some companies in the US and in Israel as well. Remained committed into the I would say climate space, but more particularly in the energy, mobility and industry transformation areas for the last 20 years, and now investing out of our 5th fund, if I recall correctly. So very nice to be here today with you.
Thank you. And last but not least, Kajisa, you guys are the most favored VC, so definitely entrepreneurs and community reflect on that. Please, over to you.
Thank you so much. Yeah, we're very excited to be here today, and also like to say thank you to the whole team who've organized such a great conference over the past couple of days. But ETF stands for the Environmental Technologies Fund, and we are a London-based venture capital. We're focusing on environmental and climate tech. We were founded in 2006 and has since then been one of the European leaders in this space. We are looking for exciting companies across Europe, and we usually invest at a Series A and B round. ETF has always been focusing on supporting inspiring entrepreneurs to help them grow and internationalize, and to make sure that their solutions for a sustainable future can reach as many people as possible. In our most recent fund, we've been focusing particularly on the digital sustainability and climate tech. So very excited to be here today.
Thanks. Thank you so much. So without further ado, I want to dive into one of the most important questions here: why climate tech matters. I think through these 2 days, we had numerous speakers. We had over 200 speakers discussing over 100 panels or keynotes. And I think there's a few numbers that stick in my head. There's this number 21 trillion as a clean opportunity over the next 10 years, cumulatively, as governments, corporates, organize themselves. And we as investors obviously like big TAMs. And seems like climate tech is really, really big TAM to target over the next 10 years. And again, another one, timing, a very, very crucial one. So with timing in mind, I want to form our discussion about past, present, and the future. And I would like to start with the first question when it comes to past to Rajesh. As Khosla, you've been very vocal in the early days of Climate Tech 1.0. And I think, while it was really different to where we are today, timing is a very important metric when it comes to investing. Some reflections from that time back in the days and now, what do you think has changed and what we can learn from that past experience?
To chime in on that, I think there is a lot of learnings from what happened in Clean Tech 1.2, and I consistently see some of those things again. So hopefully, I'm sure we'll make mistakes, but hopefully we all won't make the same mistakes. That's the more important thing. So I think when I look at clean tech, particularly the hardware side of things, techno-economics matters. Try to crystallize a lot of things into one word. You can think of a lot of disruptive technologies. That's what we invest in, most of us here. But you cannot think of a disruptive Excel file. So when you think about the economics, it's very, very important to make sure the disruptive approach you're taking has the potential to meet the cost targets that the industries are looking for. We were looking at back in the days there were 200 solar companies. Unfortunately, most of them failed, and some of them failed because of the techno-economics issue. So that's something we should continue to keep an eye on and make sure we don't we invest in companies that have a prayer for meeting some of those cost targets. Second one, I would say, in general, it's true. That's what I tell our portfolio companies, new companies. Companies should focus on chasing value and not necessarily valuation. Things do get hard. Things do get very busy and stuff like that. So it's important to make sure for companies to bring investors who can help you in the long run. So I would certainly say keep that as a focus. Clean Tech 1.2, a lot of investors jumped in. Most people, went away, unfortunately. Clean Tech 2.0, we see the same thing. A lot of people coming in. Hopefully, they will all stay. There'll be a lot more capital into the companies. But it's important for companies to make sure you're bringing in investors who can add value for you and not just for the sake of valuation. Third thing I would say, particularly given we do a lot of the hardware companies, is focus on building a product that kind of keep in mind the cost that is needed to build the first minimum viable plant, because a lot of the hardware industries, we are looking at cement, steel, and all of that stuff. You cannot underestimate the plant size needed to validate to get to the next stage. You cannot overestimate it as well. So it's very, very important to keep that in mind. And the last one I would say is, good strategic investors can be very valuable. Just like in financial investors, there can be good or bad. In strategics, the same thing happens. But it's important to have good strategics on your side also, who can be very helpful in building the company, in addressing a lot of the technology issues you're facing. So these were some of learnings that we had, and then there's a whole bunch. But I would say these are the top few.
Thanks a lot, Rajesh. Fabian, over to you. You started, as Astor started as a fund that was backed primarily at the very beginning by Schneider Electric. You still have quite a few corporates backing you. From those experiences, and Rajesh mentioned that corporate partners are very important for these companies, especially as they move along. We know one of the important facts that we always complain about is sales cycle in energy, as a matter of fact. What are your learnings from that, Cleantech 1.0 moment, and what you're bringing now into your organization when you look at the companies, the next gen companies, whether we call it Cleantech 2.0 or just generally, I think it's called now climate tech.
Yeah. I think on our side, Rajesh already mentioned many things. I guess I share or we share on our side in our experience. We've made several mistakes in the first wave of clean tech. Most of the times, I think if you recall back, you have a mix of timing issue, capital issue. Sometimes what I like the most is really the full evidence that a value chain and a supply chain was shifting to the right cost metrics. Because at the end of the day, if I recall a bunch of investments from the first vintage of our fund, the one that actually made the best return to us is a company that was not really holding a great technology novelty because they were probably the first European developer of solar crystalline photovoltaic plants. But actually, we made a bet where we actually timed the market pretty well. We were understanding that at that point, the cost metrics of the silicon PV modules were dropping to a point that at some point will reach grid parity, and together coupled with the European feed-in tariffs, could make this a proper business if, of course, executed well, if, of course, we're finding the right support from the financial community. But at the end of the day, I think the main difference was really to time the shift of a value chain together with the maturity inflection point reached by that technology at that time. And I can recall many of our mistakes of the first vintage fund, which was mostly hardware focused technologies. In many cases, I mean, we invested in hydrogen type of technologies. We invest in energy storage, probably ahead of times, actually on technology that were sold for not a great return to industrials that actually made good businesses 10 years after that. And maybe it was lack of passion capital at that time. It was we were too much ahead of time. Having invested probably this moment 10 years after, 12 years after, we could have made a different exit at the end. But good technology at that time was not enough. And even good capital at that time was not enough. What we were missing was the time probably point and the value chain shift that we were requested. And in that case, didn't work out.
Thanks. Yeah, and over to you. You had a massive merger going on, right? Innogy and E.ON to form the largest utility in Europe. You have been backing companies for really, really a long time now as a corporate. From your angle, I think a lot of people mentioned that hardware was a big deal because software was not chased there, the computing was not there, the cloud was not there. A lot of things that now enabled it. What were your learnings as a corporate, as a matter of fact, investing in these technologies back then and partnering them on a strategic level in your firms?
Yeah, I'm just reflecting while I'm talking, so I'm coming some new ideas as well. So I'm building on what Fabio and Raj have said. Agree to all of that. I think the addition, I think mainstream has changed tremendously since climate tech 1.0, isn't it? So now it's in social obligation. Everyone wants to contribute. There's much more talent in the market with regard to our efforts and our climate actions for net zero carbon system in future. And linking it back to experiences that we started, at least in the corporates, with all this experience of and tremendous disruption of our market and value chains, with a lot of hope and wishes that industry is changing faster than we expected. In the very end, we invested into a lot of good technologies, IoT platforms, IoT communication protocols, energy solutions for private customers to connect batteries, cars, and so on and so forth. But the timing was, in fact, not always ideal. If you look at today's market and what happened past COVID, we have a totally different market with trillions of funding available now for all this solution, and with a lot of passion and motivation of clients to change, in fact. And top of this changing value chain is the changing behavior of clients, which we are lacking, and we are looking forward. And we see so much good trends and opportunities right now with the oversupply of capital on one hand, and with the increasing amount of talent joining the task to changing our energy system. So yeah, that's my reflection on the topic.
I really like your point. I think there's just monumental shift in, I think, what entrepreneurs want to build even now. I think there's one, everyone is driven by exit. I think ourselves as VCs, but so are entrepreneurs. But in reality now, there comes the impact part. People want to really change the world. They don't want to build another app. They want to build companies that are impactful both to their employees, to communities, to their shareholders, and really to their investors. So Katja, just to summarize, I think on the kind of past and leaving it behind, I guess, going into the present, what were learnings at ETF? You've been there. I think you probably launched the first fund right at the back of this conundrum of Cleantech 1.0, where there was a lot of capital coming in and leaving it straight after. What your takes?
Yeah, well, I was thinking here, that in the beginning of Cleantech, there was the boom and the bust. And after a few years, you could always say that Cleantech became a dirty word. And I think that all the funds here have managed to ride that out. And we are seeing that the hype that was then, and there's the hype coming back now. If you're looking at, for example, the hype scale, it went up very high, and then it went down again through the throw of disillusionment, but it is now back. And we do believe that it is back now to stay. It's become, as John said, something that is expected. It's a very different world we're living in. You're seeing a lot more investments, and you're also seeing companies. It's not a good to have, it's a must now to be able to, for example, measure your CO2 emissions and making sure that you're doing right by the environment and by your consumers.
Yeah, absolutely. So stepping into the present, we're definitely into a different situation. 2020 has, as we previously showed on the presentation, has been one of the most successful years for fundraising from an LP side from a VC standpoint. Really, we're seeing a lot of capital flooding, not to mention SPACs really providing liquidity for these early stage companies. We're seeing more urgency on the corporate side. It seems like we're in a good speed and path. What do you think are the biggest challenges now as investors? Is it lack of deals? Is it competition? Or maybe we still don't have enough talent there to addressing this? Where do you feel we are in this cycle now? Feels like for me, we're just getting started, but I would love your ideas around it. We can start with Rajesh.
Sure, happy to kick it off. I'll try to keep it short. I think that a few things that would be interesting, that would be valuable, are having a sense of the pricing signals. Like if you're looking at things like carbon capture and a few things, some certainty, some visibility around what the pricing in the markets would be helpful. Number two, as we continue to build a lot of companies, and some of them are scaling up very well. Top talent is always a critical aspect for all these companies. We call ourselves, we don't call themselves a glorified recruiter. So it's really important for people who have been very accomplished in other areas to come into clean tech, take that bold step, and that's what would really make these companies successful, not just capital. Third, I would say, yes, there is a lot of capital, but I still feel like we need some healthy set of investors who can take these companies through the classic valley of death. I've seen a lot of new funds coming up with in the $100 million range, $125 million range, or there's a lot of capital on the private equity side. But there is still, you need healthy pool of investors who have a $500 million, $1 billion kind of fund, so they can write healthy checks for Series A, Series B companies. So I think capital is still a concern, particularly for hardware deep tech. And I think the fourth one is governments need to step up more in terms of real R&D, real investments, rather than sugarcoating some of the job creation as position job creation as clean tech. Some industries need a lot more capital if you're really thinking about taking carbon in the next 10, 20 years. About this, China.
Yeah, Rajesh, I would agree with that. I think that one big challenge for climate tech going forward is the capital intensity and the scalability of that. So there's quite a lot of revenue that is needed. There's a lot of investments that needed to reach revenue and growth, which can be quite challenging sometimes for a venture model. And that's also where you need investments into, for example, pre-revenue. And that's where it's important that governments step in. And in Europe, we've been very fortunate that both the UK government and the EU are great here, that they are giving a lot of grants to support new ideas and allowing companies to develop great products that then VCs can come in and help commercialize and help grow and build.
Any thoughts, Jan or Fabio?
Yeah, happy to follow. I think we are a little bit fortunate because we from the very beginning focus much more into the topic of software technology, digital solutions than hardware. And we believe that's one of the bigger problems we need to solve in the next decade or so. Because if you look into the markets and the increasing share of decentral energy resources, like small PVs, electric vehicles, a storage solution, and so on and so forth, that will be the task will be to create, to build, to innovate the software solutions to create somehow a holistic and coherent energy system, which is not owned by one, which is owned by many, and it's organized in a proper way. And we believe that's the opportunity here. With the huge demand on the customer side, and then increasing amount of energy hardware, so to say, or renewable energy hardware, that makes it really a task for doing so. And I think our challenge is just to keep focus. Keep focus on that task we are really focusing on, keeping focus on where we are coming from. We are an energy industry player, so connecting startups, helping them to onboard into the energy companies and testing their solutions, creating new products, helping them to onboard, connecting them to our customers, and that are our challenges. Really managing through this amazing growing market with a lot of capital and different opportunities and possibilities you could focus on, please, in keeping our focus on that task to creating the future software which runs our energy system, and that will definitely then create a sustainable energy system.
Thank you.
I might want to pick up just one, maybe two max topics that have been raised by my colleagues. I agree most of what has been said. I think one point that maybe sometimes is overlooked, at least I see a relatively high difference between US and Europe in this aspect, is talent. Because honestly, when talking to climate-related or impact-related startups in Europe compared to the US, especially for hardware companies, I see still too much, at least from the companies we talk to, still too much techno-focused people, people that are too much focused on R&D, too much focused on product, which is great. I mean, don't make me wrong. Product is and product differentiation is really important. But here we're not in biotech. We are on turning technology into a product, into a viable business. And in my view, one of the challenges I see, especially in the early stage arena, is to have in front of me people that are maybe great technologies, but are not good at building businesses and building a great story around the product, build a business out of a vision that, of course, is not definite when you're just starting, but needs to fulfill a dream. And I see where, in US, because we have the fortune to also be able to compare on some investment thesis, startups, out of California and the startups out of Europe. In this aspect, I think we still need to learn a lot by our colleagues over there. And you know, in the past we've done withdraw some comparison that even better technologies in Europe haven't done as well as US comparing the comparable technology. So I think here is something that we are catching up. I'm seeing you know, European companies that are progressively learning on this aspect. But I think we still need to you know, fill the gap, especially if we want to aim at big things, big disruption, disruptive technologies, and making big hits out of Europe.
Absolutely. I think one important thing is that, you know, venture capital has been a really tremendous value creation, has been doing a tremendous value creation and job creation over the last couple of decades. Certainly, we see now the most valuable companies in the world, like such as Facebook, Google, being venture capital backed businesses. I think to the discussion that we had in the morning with Secretary Jennifer Granholm, it's interesting, you know, these numbers and significant amount of capital allocated from a government side in US, in China, in Europe are going indeed into climate. The question usually is there a word tech attached to that? What are your takes on the government role? And do you think VC, I think I throw a number there, we mapped like 175 funds, there's 120 billion managed by them. Do you take this as a low or a high number? And do you feel that government should put more emphasis to backing venture capital funds, because it seems that they're really great at creating value and jobs rather than sometimes infrastructure or grants? What's your thoughts on this? Any of you can take it.
I'll let somebody else go first.
Well, I could go first, Raj, if you wanted me. Oh, if you don't want to go first?
No, go for it, Jan.
Go ahead.
Okay, cool. I'm not a fan of now asking governments to funding more our industry and providing more and more funds to it. I think they did a great job, especially here in Europe, with helping a lot of startups scaling and providing corona matching facilities in every country, and that worked quite nicely and was quite unbureaucratic. So we were really delighted and appreciated that. But in the very end, whom drives this revolution and whom started to drive this revolution in the late 80s of the last century? That was the society, and that started in Europe, and then it went a little bit further. And I think the society, the customers, the young talents, they need to pick up this revolution. And what we need for funding more, having more scalable business models, more talent in the industry, more people which are focusing on hardware or software technologies which are instrumental for that change. And customers needs to pick up to buy the products and not only and also following what they are saying, buying the products, buying electrical vehicles, applying storages in their basements, and so on and so forth. So it's on us as a societies, on the nations, that we are picking up all the instruments which are available. It's not the government as such. The government will always follow. I think we, as human beings ourselves here in the chat, as well as the people out there, we should really take it personal, and also start on a personal level, and then scale this energy on new clean tech wave.
Yeah, absolutely. I think we would agree with that, and also that we all have a big part to play in it. I think where the governments can come in by supporting VCs is, I think that VCs are very good at building businesses that grow. So for a business, if you're a climate tech business and you want to be truly impactful, you need to reach a lot of people, and a lot of people needs to get access to your solutions, be that people or be it companies. And that is really what VCs do very well, growing the companies and internationalize and helping them on that trajectory, which is something I think we have a big strength in.
I do think government has a good role to play, like everyone here said, in terms of giving, ITC regulations or carbon pricing or any of that stuff in terms of driving the market in a direction. And particularly in the US, I think government has been reasonably effective back in the DARPA days for kicking off the telecom industry, or even in the Clean Talk 1.0 days, for funding the Teslas of the world and a few other things. There are a lot of failures, but there are some good successes that spurred the VC ecosystem. My biggest concern with government is it's too low, too slow in terms of the dollars they deploy, as well as how much time they take to deploy this capital. But there is a lot of capital available. So if they can change their perspective on the kind of people they hire, how fast they can move on these things, it's really healthy. Because like I said, there's a lack of capital on hardware on the Series A, Series B kind of investments. For a fund to go and raise it now, it'll take a year or whatever, right? It's a long time period to go raise a new fund. But government can at least fill that void because we're running out of time. So from that perspective, I think government should do a far better job than they've done in the past and be moving fast enough to invest in these early stage companies.
I completely agree with what Rajesh said, because honestly, I think that especially on hardware, especially when you're early stage, when you're very far from metrics. I mean, the main difference between hardware focused startups and digital pure focused startups is that it's very hard at the beginning as an early stage investor to identify any metrics, any meaningful metrics, any economic metrics. You're far away from market already, still. And so you need a lot of support. And there is clearly lack of capital at early stage for hardware today, and will probably stay because I think LPs are a little bit reluctant for the time being on these aspects, and understandably so. I think there will be a long discussion to be made on also changing the way venture capital funds are structured. I think for some specific venture capital investment thesis, you will need, the 10-year fund structure is not adequate for whatever reasons. So I think governments can definitely come in support there. And I think to some extent I see some good news. Honestly, if I see, for instance, Europe and France specifically, I mean, in 2012, 2013, we were looking with one of our bioplastic company to build like 100 million euro plant for a technology that was already pre-commercial, so to speak, and it was a very hard time. Actually, eventually we didn't find any government support there in any state until we found a joint venture with a major chemical industry player. And at that time, we were able to find government support because there was a big corporate that was backing the project. I mean, nowadays, these kind of nightmares, actually, the company went very well. We IPO'd the company at some point. So, but we could have risked to really, write off completed investment. Nowadays, I think this type of things are much more rare. You've seen probably Insects, a French-based company that is doing quite great for new proteins. Food, of course, is one of the topics in next climate wave, in my view, that needs to be taken care of. But still a lot of hardware. And fortunately, now governments are doing their job, but still more is due. And I think in Europe, we still miss a DARPA-like kind of organization that can really finance early stage technology, early stage R&D with massive amount of money. I understand that they're still slow, but at least lots of money down there that can be spent. In Europe, I think we're still struggling there, but good signs, hopefully.
Absolutely, I totally agree with you, Fabio. And I think some really great funds are popping up as well with like way longer, I think, duration. So where they do like 20-year term, someone like Breakthrough Energy Ventures doing a great job in both over Atlantic in Europe and in US. And then you also have amazing initiatives like MIT Engine, which are building really great companies and in a very unique way, especially what they call tough tech. So definitely, I think there's a lot of great progress. And that leads us to the last discussion stop, which is called future. I want to take this question completely differently. Why is it that you guys invest in climate? Why did you choose this path and this sector? And as a final note with each one of you, what is your word or suggestion or message to the entrepreneurs out there? Rajesh, you start. All eyes on you.
Okay. Well, interest of time. We've got one Earth, and we've made it really, really dirty. This is our opportunity to change it. There's going to be new oil, there's going to be new plastics, there is going to be new steel, we're going to be able to completely revamp so many industries and create a lot of wealth, a lot of economy while cleaning up the world. So that's the reason to do this, and the time to do it is now.
Amazing.
Yeah, absolutely. I'll go next. I think, well, our motto is actually sustainability through innovation. And we think that to invest in climate change is also technology, and innovation is key to reach a net zero environment. And we are optimists in this. We do think that by investing in technology, you can achieve sustainable prosperity, and we need to prosper without using up the world's resources. And that's where we need to do the investments. That's why we want to invest in climate tech.
Amazing. Jan?
So, yeah, thank you, Håkas. Yeah, we believe investing into digital solutions and software solutions for the future energy system will accelerate the energy transition and create a fully sustainable net zero carbon energy system. And that will secure the future of our planet. And that's our all obligations for the next generations to come. That's the reason.
I mean, I will not repeat my colleagues because they already said a lot on this topic. I
Fabio,
think one of the
not only for the firm, personally for you. That's the most important.
No,
one.
I think
what keeps you up every morning.
I think one of the things that to some extent impressed me the most is that the more you dig deeper in any aspect of our economies, in any aspect of our digital world. I mean, everyone now is excited, from my young kids to my old parents, to use internet everywhere, to use mobile phones everywhere, to buy on Amazon everywhere in the world, to be delivered. I mean, all these kind of things that made us also surviving through pandemic last year is made possible by something that behind consumes a lot of energy. Data centers, servers running everywhere, logistics. I mean, everything at the end of the day consumes energy, and everything consumes resources. And if we are not capable to find good new ways to either save energy, do things in a different way, more efficiently, improve bottom lines of all these operators, at the end of the day, what we do is that all this good work will not be sustainable in the long run. So we need to really take care of everything that surfaced to us today that is great, behind as industries, very dirty industries that need to change. And that's our own beat, our contribution to this change.
Amazing. With that note, just final thought, I think what came a lot in this discussion especially is the mindset change. And that doesn't start or end with venture capitalists or corporates. That ends with every one of us as individuals. And I think this is a really, really great time. I feel personally very rewarded to be able to do what I do and invest in these great entrepreneurs and to be really, really very tiny part of their journey. And I feel that the scars of Cleantech 1.0 are already cured by LPs, and they're going to really trust in what I believe is the biggest and most important transition of what we're going through. Again, I want to take a pause, and each one of you applaud for yourselves what you do, because you are the winners of Climate 50 and in your own category, the most influential fund. So really thanks for joining today, and a short applause to yourselves as well. So thanks a lot.
It was a pleasure.
Thank you, everyone.
Thank you so much.
Thank you so much.
We thank all the speakers. Thank you so much. It was really like champions time, right?
Exactly.
Rokas.
Exactly.
Rokas, thank you so much for hosting the last panel of the summit. And unfortunately, time's up. It's time to wrap up.
It's been a long 2 days.
Absolutely.
Quite
it's
a lot of exciting
3
discussions.
days, not only 2
Exactly.
days.
Exactly.
It's been 3 days, and soon we will go for your final remarks. But before that, we would like to say sincere and heartfelt thanks to our sponsors, because without the sponsors, probably this is going to be like Mission Impossible, right?
Absolutely.
So once again, we thank our sponsors, main sponsor, E.ON, Platinum sponsors, BP Ventures, BP Launchpad, Enefit, Invent Capital, Flux Federation, and Ignitis Group. Our gold sponsors, Drake Star Partners, Silonius, and Acario Innovation. Silver sponsors, NG New Ventures, Zinc 5, Hedera, Hashgraph, Helen Ventures, InMotion, Efficiency. Startup sponsors, Tate Technologies, Stable, Soteria, Battery Innovation Group, Hepta Airborne, BetaSense, Beyond, Deep Isolation, Our Energy, Hyperion Executive Search, Device Pilot, Cosmotech, Ducktrain, Livio, Elic, Encourt, Stuart Energy, PV Case, Autofleet, Jetlix, EH Group, Twin Threat, Fusebox, Intelligence, Violane, and Moixa. And of course, global payments partner, Apex. Once again, sincere thanks to all our sponsors. And now, Rokas, it is time to the final remarks of the summit. It's been really magnificent, extraordinary, absolutely offshoots 3 days.
That was definitely a very amazing time. I think I want to thank first, obviously, sponsors, but most importantly, the team that has put a tremendous amount of work into this happening. While unfortunate with the current pandemic, we cannot meet each other face to face. But in reality, this has been, while it looks like we're doing a virtual, which seems like a very easy thing to do, there's been 220 speakers. There's been 100 panels over the last two days. On the first day when we started with Energy Tech Challenges, there's been 70 jury members. There's been 60 startups pitching. And there's been literally a plethora of people that are running around for these 2 days to make it happen. So firstly, thanks for those people putting the hours. We know that a lot of people definitely are tired and want to go. It's been tremendously amazing to have you all join from all around the world. And I think a few takeaways from it is everyone should applaud themselves for committing time to this dialogue. This is a very important dialogue. I think, as we said, 51 gigatons, net zero as the two numbers. It's definitely not straight line for that journey. It's a journey with ups and downs, with a lot of turns, a lot of thinking of whether to go right or left. But what really excites me is, and the purpose why we build, I think, Energy Tech Summit and Climate 50 is everything we do is about community. I think we as individuals as well unite in small communities, and we operate to those, whether that's investor communities, whether that's entrepreneur communities, or whether just generally climate activist communities. And I think what's important in these topics and discussions that we've been happening for a few days, that we don't just make it at discussions. We need to make them actionable. And I hope each one of you took those 3 days to start discussions that lead to an actionable action. And I wish you to not forget these discussions and take them to real action, which gives us that a bit more straight and most importantly, fast route to zero. So thank you all again.
And probably I will add that we had thousands of viewers around 55 countries, I think. So it's been really a pleasure and honor to be here. And I don't know why, Rokas, but your team said that I should definitely say that, that we will see you in September, and that's for sure, and hopefully in person. I don't know why they said
Absolutely.
that.
It's always never a bye till next time.
Yeah, absolutely. Rokas, it's been a pleasure. Thank you so much.
Thank you so much.
And we hope that everybody will get some insights for the future on very important mission to net zero. Thank you. A lot of greetings from the city of Vilnius, the capital of Lithuania. Bye-bye.